Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. In this report, we'll be looking at Strive Incorporated's latest move, and trust me, it's going to be a game changer for shareholders. Before we dive in, if you love getting these clear, no nonsense breakdowns of big company moves, make sure you hit that subscribe button and ring the notification bell. Also, we've got a fantastic community over on Discord where we chat about all things market related. The link to join is in the description below. Strive Incorporated is making a significant change to its stock structure, and it all started on the 3rd of February 2026. They filed a certificate of change with the Nevada Secretary of State. This document outlines a pretty big move, a reverse stock split. Now, what exactly is a reverse stock split? Imagine you have 20 slices of pizza and you decide to combine them into one single larger slice. That is essentially what Strive is doing with its stock. They're taking every 20 shares of their Class A common stock and their Class B common stock and consolidating them into just one share. Why would a company do this? Well, often it is to boost the per share price. This can make the stock look more attractive to institutional investors who might have rules against buying stocks below a certain price. For Strive, this means their authorized shares of Class A common stock are going from a massive 444 billion down to 22.2 billion. That is still a lot of shares, folks, but a significant reduction nonetheless. The number of authorized Class B common stock is also shrinking from 21 billion down to 1.05 billion. It is important to note that this reverse stock split does not change the total value of the company's outstanding shares. It just means there will be fewer shares trading at a higher price per share. This change is effective the 6th of February 2026. After this date, the Class A common stock will continue to trade under its current ticker symbol, AST, on the Nasdaq stock market, but now on a reverse split adjusted basis. Now, what about the preferred stock? Strive's variable rate series, a perpetual preferred stock, is not being affected by this reverse stock split. The total authorized shares of preferred stock will remain at 21 billion and the number of issued and outstanding shares of this preferred stock will stay the same. One interesting detail is how they're handling fractional shares. If a shareholder would normally be entitled to a fraction of a share, after the split they will automatically be rounded up to the nearest whole share. This is a nice gesture to avoid the hassle of dealing with small fractional amounts, and it means no cash will be paid out for these fractional shares. Their transfer agent VStock Transfer Incorporated will be handling the exchange process for shareholders of record. This filing also confirms that Strive Incorporated is indeed an emerging growth company. They've chosen not to opt out of the extended transition period for complying with new or revised financial accounting standards. This means they can continue to follow older accounting rules for a bit longer, providing some flexibility as they grow. The filing also touches on other standard corporate reporting items. It mentions that Item 3.03 material modification to rights of security holders is incorporated by reference into Item 5.03 amendments to Articles of Incorporation or bylaws change in fiscal year, which is where the details of the reverse stock split are laid out. Now let's put on our analyst hats and think about what this all means. This reverse stock split is a strategic move. Strive is likely trying to improve its stock's market perception and attract more serious investors. A lower stock price can sometimes be seen as a sign of distress or low quality, even if the company's fundamentals are sound. By consolidating shares, Strive aims to present a stronger, more stable image. However, we need to remember that a reverse stock split doesn't magically fix underlying business problems. If the company isn't performing well financially, the stock price could still fall after the split. It is crucial to look beyond this structural change and evaluate Strive's actual business performance, its revenue, its profitability, and its future growth prospects. Looking at the broader context, Strive Incorporated operates in a competitive landscape. Any move that strengthens their financial positioning and investor appeal is noteworthy. This reverse split could be a signal of confidence from management in the company's future trajectory. It suggests they believe the company's intrinsic value is higher than the current share price might indicate. The fact that they are an emerging growth company and choosing to use the extended transition period for accounting standards is common for companies in this stage. It allows them to focus resources on growth and operations rather than immediate full compliance with every new accounting standard. Ultimately, this filing is all about the reverse stock split. It's a significant operational change designed to reshape how the market views Strive's stock. The real test will be whether this move is accompanied by strong operational and financial performance in the coming quarters. We'll be keeping a close eye on that. Alright, that is our breakdown of Strive Incorporated's latest filing. What is your take on this reverse stock split and what it signals for the company's future? Do you think it will be a successful move? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribing with notifications turned on ensures you won't miss our next deep dive. Don't forget to join the conversation on our Discord server, the link for which is in the description. Thanks for watching, and we'll see you in the next one.